combinations in third year. All right, you do business combinations in third year when you're dealing with consolidation. Okay, so you can ignore that part for now. Okay, so there's this example that I wanted us to go through, example 1 and 2 on page 553. We'll start with example 1. Let me just open the book, Global Digital Editions. Just looking. What was the page? Let me just go page 553. I don't know what's going on. Okay. Sorry. I just want to deal with the indicator reviews. And we're dealing with this page. Okay. So let's look at this example. So one thing that I just want to point out, I will deal with this when I'm discussing your tests. Hopefully on Thursday, I'll bring your tests and maybe we can have a physical class so I can hand out your tests. Test 2. One of the things that I noticed was the discussion questions. A lot of you have problems expressing yourself in writing or in written form. So what I want you to note is that just think of it as you explaining to someone who has never done accounting before, and you're explaining something in writing. Okay, so a lot of things that were explained, there were 2 questions in the test, in test 2, that you had to actually write answers to. And although some of the things in some of the questions you had keywords that were important, the whole sentence was not correct and I could not award a mark. And I will illustrate that to you when I'm giving out the test. I want you to now just take your mind off that accounting is just about numbers. When you start doing auditing is about writing. You're writing a report. You'll do auditing next semester, if I'm not mistaken. And if you cannot write, you're going to lose a lot of marks. If you cannot express a thought in writing or in written form, you lose a lot of marks. So there's a reason you do principles of language use, English for academic purposes. It's just to help you with your writing skills. And a lot of accounting is about writing. It's not only about numbers and figures. So please just try and improve your writing skills. And the way you can improve your writing skills is by reading, all right? Not necessarily reading academic books, but just literature. And you can read storybooks, see how a sentence is constructed, okay? See how a thought is put down. This is very important for you going forward, all right? And so I just want you to put that. And the reason I'm talking about that is because, like, this question tells you to discuss. If something tells you to discuss, you cannot now provide journals. All right. So there was a question in the test that said discuss, and some of you are providing journals. How can I give you a mark? Someone wanted to ask a question. You can go ahead.
Yes, so when it comes to discussion of questions, especially in tests or work papers, could Sir provide us with a rubric that we could follow, especially, for example, if it says discuss, where we know there is a calculation to be made so that we refrain from giving information that is not particularly necessary to the question? Could that maybe provide us with a rubric?
Okay, so unfortunately, I cannot provide you with the rubric, but the rubric will be the question itself. Because, okay, if something tells you to discuss presentation and disclosure, if you're going to discuss a definition, you will not get any marks because the question tells you to discuss presentation and disclosure. Now, obviously, I cannot break it down in the question paper to say 5 marks will be given for discussing presentation and 3 marks be given for discussing disclosure, because that is presentation and disclosure is one thing. But what I would like to refer you to is all the tutorial questions and previous test questions, just so that you can see how the way a question is asked and the way it is answered. And if you can follow, if you can answer a question in the way the way the solution presents it, right? Then you'll be able to go forward. So that is why it's important to do tutorials. For investment property, we didn't do a lot of tutorials that dealt with theory where you had to discuss, but there were a lot of questions that were on e-learning, isn't it? Whereby it was the discussion question and you had the solutions to it, isn't it? If I'm not mistaken. So I don't know whether you went and actually looked at that. And another thing is, what I've noticed is many of you are very good at memorizing, but you're not good at applying. So memorizing a definition is okay, but most of the time your answer isn't going to be in terms of memorizing a definition. It's going to be about applying that definition to the scenario that you are given. So in the test, you were given a scenario that dealt with the mobile license. So you had to discuss, does the mobile license meet the definition of an intangible asset? All right. So just providing the definition of an intangible asset is not enough to score you all the marks. You now have to apply and say, why does a mobile license meet the definition of an intangible asset? All right, I've gone on a tangent. Let me go back quickly and let us just finish with this question. We'll only do example 1. Lilly Limited owns a plant, its largest non-current asset. The plant originally cost 700,000 on 1st of January 20x4. It has a carrying amount of 350,000 at 31 December 20x8. It's depreciated straight line to a nil residual value over a 10-year estimated useful life. Lil Guy Limited performed an indicator review at its financial year end 31 December 20x8. So this is important. We always said the indicator review is usually done at year end. To assess whether this asset might be impaired, initial information collected for the purpose of the review includes budgeted net cash flows. These are slightly reduced because of a decrease in market demand for the plant's output is expected during 20x9, after which it has been determined that due to the intensive usage of the plant in its earlier years, there is to be limited use beyond 20x9. So they use this plant extensively in its earlier years. The present value of future cash flows is 230,000, and then the market price per share of little guy is $2.20. There are 100,000 issued shares. A summary of the totals in the statement of financial position is as follows. You have assets, 400,000, liabilities, 100,000, equity, 300,000. Okay, so your equity is just your net assets, which is your assets minus your liabilities. So you are required to discuss whether the recoverable amount must be calculated at 31 December. So the first thing that we have to go and do before calculating the recoverable amount, right? Some of these things you'll have to do. Find out whether these estimates are valid, things like the useful life, residual value, and some of these things you have been given in the question. Okay, so you'll see the solution to this question is actually quite long. If you look at this question, it's almost 2 pages long that the solution is. So it's the whole of page 554 and 553. Now, one important thing to note is that it's not one thing that will tell you whether there's an indication of impairment. So you have to look at each step. So let us look at net asset value. So let me go back to the theory first. Okay, so we had external and internal sources of information. So things like the net asset value per share, that's an external indicator of impairment. We looked at things like obsolescence, right? We looked at things like obsolescence. We looked at things like economic, we have to look at things like economic performance of the asset. And when you're looking at this question, things like net asset value per share, it's very easy to calculate. So the net, how are you going to calculate the net asset value per share? You're just going to take your net assets, which is basically your equity. Net assets is your assets minus your liabilities. So that 300,000, which is your equity, you're going to compare it against your market price. And look at the market price. The market price is $2.20 per share and there are 100,000 shares in issue. So if you say $2.20 times 100,000, you're going to get an amount of 220,000. That market price is already less than the net asset value. So let us look at this. The first solution. Little guy's net asset value is presented in its statement of financial position as 300,000, which is your assets of 400,000 minus your liabilities 100,000. That equates to a net asset value of 3 per share. How do they get 3 per share? So that is the 300,000 net asset value divided by the number of shares in issue. We are told there are 100,000 shares in issue. So that $3 per share is higher than the market value per share, which is $2.20 per share. So in this instance, there is a possible indicator of impairment. There is a possible indicator of impairment, but we cannot look at that alone. All right. So in this conclusion, let me read the whole sentence. The guy's net asset value presented in statement of financial position is 300,000. This equates to a net asset value of $3 per share. However, the fact that the market perceives the value of little guy to be $2.20 per share or 220,000 in total suggests that the total assets in the statement of financial position may be overvalued. This difference in value appears to be material and suggests that there may be a possible impairment. All right. There's a possible impairment there because the market value is much lower than the value of the assets. Let's look at the future cash flows. The future cash flows from this specific asset, the plant, will be reduced over the next year, which suggests a possible impairment. But the fact that the reduction is expected to be slight suggests that the impairment would be immaterial, and therefore this fact alone does not require a recoverable amount to be calculated. Okay, so remember I told you that you will not calculate the recoverable amount if it seems as if the amount is not material. Now, how can you determine if something is material or not? How would you determine whether something is material or not? Can anyone tell me? Hello?
So can I try?
Yes,
Can
go
I
ahead.
try? So I think when the amount is significant, when it's larger, I think.
Oh, but what do you mean when it's large? Because 100,000 for me might be a lot, but maybe for you it's not a lot. So how do we determine?
So
Yes?
I think it depends maybe on what kind of business it is. Say maybe it's a capital intensive business. So 100,000 when it comes to machines could be material to them, but if it's a small business, it might not be material to them.
Okay. So let us look at this. Let us look at this net asset value, for instance, when we go back to where we compare the $300,000 against the 220,000. That gives us an $80,000 difference. So 80,000 divided by 300,000. How much is that? That's 20 something percent. 20 something percent different. Might seem to be material. Imagine, let's say you have 40% in your test and that was misstated by 20%. Then you should have had 60 something. So that could be considered material. But there's no set rule that says if 5% is material or 10% is material, 20% is material. When they're doing auditing, they normally come with set benchmarks for materiality. So they'll say maybe 5%. If something is 5%, there's a 5% variance, it might be material. Or if there's a 10% variance, it might be material. Okay, so you also have to look at the scenario. The scenario in this instance, when it comes to the future cash flows, it said that this is the last point, and then we'll just end for today. Budgeted net cash flows here, these are slightly reduced. So the word there, slightly reduced because of a decrease in market demand for the plant's output is expected during 20X9, after which it has determined that due to intensive usage in the plant's earlier years, there's to be limited use beyond 20X9. All right. So we know that in the current year, the budgeted net cash flows was just slightly reduced. So because it was just slightly reduced, it was that amount is not material. So just one word there, slightly reduced, can actually give you a hint of whether something is material or not. Okay, so tomorrow we will start with this example again, but I want you to go through this example and go through example 2. If you haven't yet watched the video on the notes, please do that on impairment of assets. Please watch the video first and then go through this example 1 and also go through example 2. What time is our class tomorrow? A class tomorrow, it should be in the morning, isn't it? 9:30.
8:30.
8:30. So I have a meeting. We have a faculty meeting from 9 o'clock up to I think 12 o'clock tomorrow. So I will give you tomorrow morning because of the meeting that I cannot miss, to go through this example 1 and to go through example 2 and go through the videos, and then we'll meet again on Thursday. All right, so do these examples and then we'll meet again only on Thursday. I will notify you if we will have a face-to-face class. We'll probably have a face-to-face class because I want to give you your tests on Thursday. All right. So I'll see you on Thursday only. Goodbye.
So,
Yes, there's a question.
so before you go, yeah. So I want to ask the special test of today. The students that failed test 1 or students that didn't write test 1?
This is for the distance students.
Oh, it's for the distance.
Yeah, the distance students did not write test 1 with the full-time and part-time, so that is why they're only writing test 1 today. It's not a makeup test.
Oh, okay, sir.
Yes. All right. Thanks.
All right, sir.
Bye.
Bye-bye.